We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Hey, this is Tom. If you've found value in these interviews over the years, please don't forget to like and subscribe to the channel, especially on YouTube. I don't like to interrupt the show to do this, but it helps our channel to be seen, which has proven to be more and more difficult on certain platforms. Thanks. Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is John Johnston, otherwise known as JJ, member of the Comex and Nymex for 30 years and 47-year trading veteran. He's also the writer of the Market Vibes by Alyosha Substack for the last year. JJ, welcome to the show. Thanks for joining me.
Thank you very much for having me.
So, in the spirit of your Substack and kind of how you go about writing it, what is your vibe generally right now in the markets at the moment?
Well, I don't think anybody knows. I've had a good run in gold, as many people have, because I've been trading gold all my life. So I'm generally right way in gold. I'm not a fan of the stock market. I've been negative on crude since around $70, writing consistently about why I think it's going down. And we really had a pretty good day today. Crude's down a couple bucks. So still long precious metals. I've been a passive long in silver for a couple of years, and I'm just never letting that go. Mm-hmm. I don't think it's really... It hasn't delivered, let's just say that. You know, it's been frustrating for longs. It's an expensive commodity. Silver's very expensive because, you know, it doesn't go anywhere. And if you're trading on the Comex, you know, you're rolling at 30 cents 6 times a year. So, or 4 to 6 times a year, depending. So the contango is a heavy burden. But so far, gold has made up for it. What else can I talk about? I'm bullish on bonds. I'm bullish on America. I never made any money betting on the end of the world. You know, and I would say, you know, change is good. Got a lot of things are gonna change soon. Actually, they already have changed at a radical pace, and I think that is really. You know, that's the end of the runway. We're just now beginning to lift off. So I'm really positive about new opportunities that we're going to see that we haven't seen in a long time.
Mm-hmm. Well, I certainly appreciate the idea that change is good, and understanding, let's say, how that change starts to affect the markets and being able to kind of work around that from a, let's say, a framework standpoint and base trades upon that, I think is really interesting. And you know, a lot more of a positive way of looking at things rather than, as you said, the kind of trading around the end of the world scenario right now. But I want to get a bit more of a sense of, let's say, what kind of a trader you are. You know, so many times on this show, I really try to make the distinction between how people really look at the metals or crude or whatever we're talking about, and really defining timeframes, because so many times, you know, somebody can say, well, I'm bullish on gold, and they just mean for the next month. And some people can make that assumption, okay, well, that means for the next decade kind of thing. So how did your time on the Comex and Nymex kind of shape your trading strategy? And what does your, let's say, what kind of time frame does your trading strategy really encapsulate?
Well, okay, so from a high level, I'll just say simply nothing works better than being right. So I don't trade unless I have a view. And I begin with the view. Like I think something, you know, and I, you know, I take my lumps, you know, I was really bearish on stocks last October and November, and I was wrong too early. And, you know, it cost me, but I don't give up, you know, because I think there's an epidemic misunderstanding about trading. You know, in my time on the floor, I went into the ring and I had a lot of guidance because uh, good trading is really participating and accepting the fact that you're going to be wrong in a lot. Uh, if you play tennis, you're not going to hit every serve. It's going to be a first serve winner. You've got to have a second serve. You've got to be careful.
Mhm.
Um, a very big part of trading successfully is understanding position size. You can be right on direction and very wrong on location, and be able to hang in if your position size is correct. If you know if you're a 10 lot trader and you buy 100 lots of gold, but it's a 99.9% chance that you're not going to be successful that way. So you have to be consistent on the amount of position and stay with no, like Dirty Harry said, I guess, man's got to know his limitations. So there are guys, they can run 1,000 lot positions because that's their temperament. Other people, they're more comfortable with 10 lots. So if you learn those things on the floor because you're in a community of guys that have learned to survive first. You got to make money every day. There's nobody paying salaries down there. You're, you got to be right. You got to either scalp or pick your spots and so forth. But the old dogs teach the young dogs in a pit environment, and everybody has to work their way up. You start as a runner, pit clerk, go to the booth, write brokerage, get to stand behind some guy. And then if you're good at all those things, the requirements, I said this before, many times, the only requirements that were necessary is you had to be honest, you had to show up, period. You had to be pretty good at math. Otherwise, you weren't going to go very far. But not the kind of, wonky stuff that you would learn, as a senior in high school. Just had to be able to add and subtract very quickly, accurately, multiply, divide, things like that, very basic stuff.
Mhm.
So all that stuff stayed with me all my life. And as I say, technical stuff is important. I think the market is alive. So just like you and I are, right? So if you have 1,000 people trading, the market's really an expression of 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 their lives, right? So I use almost exclusively two indicators: a slow stochastic. It's a 45 bar slow stochastic, very classic thing, which just gives me a sense of momentum, overbought, oversold, and Wells Wilder's directional movement index, which is probably the most. It's pure genius, and it was written in 1977. It's the backbone. Anybody would tell you this, of all systematic trend followers. I'll say it again for your readers or your listeners. Wells Wilder's directional movement index. Simple, easy algorithm to understand, and it's very, very useful.
So does that apply to every market that you're trading?
Everything.
Those two indicators?
Yeah. You can't, I don't think, trading is it's like carpentry. You're not going to change the way your carpentry if you're going to build, a house in a different neighborhood.
Mhm.
Still going to do the same basic stuff. And um, there's a lot of, I guess, you're not trading against the market. You're not trading against any other traders. You have 10 guys who are all bullish, and half of them will make money, half of them will lose money. Some of them, two of them will make a lot of money. Some of them, one or two will make a little bit of money. It's all very personal. So you have to recognize how you feel when you trade more than how you think. most of trading is reacting, not thinking. You have to have it all kind of in there. Gold, I'm bullish on gold. I'm flat gold. All of a sudden, gold breaks $40. I'm going to buy that. I don't want to buy gold when it's $40 higher. I mean, we used to have a saying on the floor: never buy gold when it's up on the day, because the move is already over, right? Mm-hmm. That's when Republic National Bank and Bogart and these guys are selling it. So it's important that when you approach a trade, you have to ask, who's on the other side of my trade, right? Who's selling it to me? I mean, I would always know that in the ring. There are guys I did not want to sell them their bids, because after a while, if you lose money doing things like that, just very, very primitive reaction to don't do that. You're not going to make money when you do those things. So that's my thing. Everybody else has their own thing, but these are all things that are rolling around in my head before I actually click the mouse.
So from, as you explained that the market is really this, let's say this tapestry of how everybody feels about a particular asset class, let's take gold in particular. Why are you bullish right now? Is it more than just those two indicators that you mentioned, as well as, let's say, maybe the more macroeconomic factors or some of the comments from Besant recently? Like, how do more of those comments play into the general bullishness of that market versus just only the two indicators?
Okay, so bullish is such an elastic term. It's like a one size fits all mood thing. Right now, gold is a very dangerous trade for someone who's not familiar with what they're doing. It's at the top of an enormous move. It may go higher, it may go lower. There's really no safe entry in gold without taking, I don't know, very, very wide risks. I always have a stop. I don't say that theoretically. I always have a stop that's in. That stop goes in when I go in, right? It's just like going up, in a plane. You need to have a parachute, and because you never know what's going to happen. But you've got to have a fixed risk, so that it can be wide. Depending on what you're thinking. I rarely allow the market to move much more than 0.5% or 1% against me, because I'm wrong. If the market's, if gold's $30 against me, I mean, the market's telling me something. You're wrong. Mm-hmm. You got a bad location. What are you going to do? Lose 60? You're going to go for 100? You can't do that. You have to be willing to just say, hey, I lost this one. Doesn't mean you don't come back and buy it again. I think it's unhealthy to do that, immediately, although I've done it and it's really worked out for me. It's just, but getting back to your question about bullish, it's more like not what it's doing or what the price is, it's why it's doing it. And I would say I'm a little less bullish now that Trump has been so effective. And I don't know what to expect, really. I mean, I voted for Trump just because I thought he was the best candidate. But I really didn't expect this. I really like Scott Bessent. I'm very impressed with the whole team he has, all these people, their sense of unity, and their immediate accomplishments, which they are so transparent about, which now, looking at the screen here, what oil's down $2. It was down 250 when we started talking. It's hard to reconcile $3,300 gold and $57 crude. Right now, just doing the math in my head, it's like somewhere around 55 or 58 barrels of crude for a single ounce of gold. And that's just never happened. Cheap energy like that and very expensive gold means, somebody's got to be wrong here. These two things will not coexist for a long, long time, I don't think. Because energy touches everything that we have in life. Everything. Everything we eat, everything we wear.
Everything we mine.
Everything.
Mm-hmm.
It's just everything. And that is going to get, the cost of delivering that to the society, the world, is going to go down. And it's not just going to be, New York City or San Francisco. It's going to be everywhere, all at once. Everybody is going to get this drop in cost. So, I think this tariff stuff is some real red herring. I mean, yeah, so, lipstick goes up 300%, right? But the rest of your life, it goes down, way down, so it's going to cost you a little more to buy a pair of socks and some underpants or a laptop. But, we're at like peak laptop right now. We have several here. I have several TVs. Got two tower computers, machinery. I can't tell you. I mean, I have so many power tools. I can't buy any more. So if the price of those things go up, okay, so you have to pay a little more for an impact drill. But Germany makes them, DeWalt makes them, all that stuff. I just think it's just going to be, since I survived COVID, right? And the supply chain thing there, this tariff thing is it's just going to be nothing. Mm-hmm. And plus, the other back end of that, which is, I think, pretty important, is what Trump is determined to do with taxes. So, quoting Scott Bessent, 10% of the population own 88% of the stocks. I'll say it again. 10% of the population own 88% of the stocks. So there's always, specious statistics that people throw around and everything like that. But I have this one kind of rings true to me. The other 12% is owned by the next 40% of the population. Half the population, that's half, 150 million people in America don't have anything. They don't have $200. They have debt. They rent their homes. They owe money on their cars, trillions in student loans. That part of America is negative. And so Trump's mission, I truly believe he is this nemesis who shouldn't be here, right? He should be dead. He should be in prison. Everything against this. And so either there's a higher power guiding this, or this is just the beauty of nature's randomness, whatever. Here we are. He's saying he's going to make the first $200,000 of your income tax-free. And he's going to compensate for that with tariffs. And that is going to be enough money to stop the debt spiral. Doesn't mean we're going to pay it back, but it's going to stop the debt spiral. So the thesis is pretty elegant, if you ask me. Listen to these guys like Laffer on TV. You know him, right? Art Laffer. A very smart guy. Even Kudlow is very smart. They say, okay, we stop that. We use tariffs. We re-empower the bottom 50% of the United States. That's a very powerful thing. They're working the balance sheet of America from two ends. One, the people who have been, I think have been pretty screwed over, and stop the debt, use the tariffs, balance trade, balance. Balance is good. Change. I was saying change before. I should have said balance. We have been in a state of incredible imbalance, huge, crazy plutocracy of guys. It's not their fault that Zuckerberg is a multi-billionaire. It's not, Musk's. They play by the rules, right? Hey, maybe you cheat a little here and there. Everybody cheats a little bit. There's no angels in life. So if Trump's thesis even plays out in part, and I think it's got a shot, we have a redistribution, an organic redistribution by merit through a meritocracy, an organic redistribution of wealth, rather than a policy or a government saying with a box of donuts, you get a donut, you don't get a donut, you voted for me, you get 2 donuts, that kind of stuff. That's gone. All right, I hope it's gone. And with that, so I'm bullish, right? I think it's, the stock market is a dangerous place right now because it's full of monopolies. 40% of it is 10 companies, all monopolies. And Trump and Besant has plainly said, we're not in favor of monopolies. We're going to help the bottom half of America, which means this meta trial, which is the antitrust trial going now. That's important. That's very important. And I think they're going to try to, break up Facebook, Instagram, Snap, so forth. You just spin them off. So, what happens to Wall Street if we go down that path? Wall Street is going to start thinking spin off and stop thinking merger. And Wall Street is just this thing as smart people trying to make money. And as soon as they think they can make money on it, they're going to get behind it. And that's the new bull market will be the same $100 of earnings, but rather than from 10 companies, they're going to come from 500 companies or 490, as it were.
Because more people can participate?
I think, yeah. Homeless people don't want to be homeless. This is not an option. They lose their jobs. I used to work at the Standard Bank of South Africa in New York City every morning. I'd come into Penn Station, 5:30 in the morning. And so I would walk through New York up to the bank at that hour, and I saw all the homeless people, right? And so I always kept $20, $31 bills on me. And as I went uptown, I'd give money here and there. Some of them were real jerks, and so I didn't get many money. But for example, there was this one gal, she must have been in her mid-40s, early 50s, who lived out of a suitcase wandering around New York City. And she was a controller for Monsanto. And so, I'd engage him, I'd talk to him and say, hey, well, what are you doing out here? Here's $5, go get a coffee and a donut. They'd say, thanks. She said, I lost my job. Then I lost my apartment. Then I was in my car. Now I'm here. It's this is kind of a tragic system when everything is focused on the virtue of efficiency, meaning quarterly earnings, right? I'm not saying that's not important. People have to be productive, but I think we can do better.
So JJ, in that, let's say that vision of how Trump gets to this point of stopping let's say the growing deficit, at least, what do you think could go wrong at this point? if we do, let's say, enter a recession that a lot of people are, let's say, expecting at this point, should we, as traders, should we be, ready for the exact opposite of that? Maybe.
So I think we've been on kind of like a bifurcated recession right now. It really depends on who you are, whether you're in a recession or not. I'm not in a recession. I have, a nice income from trading. I like to write, and I own my home because I've been working all my life. Mm-hmm. But a lot of other people are in recessions and at the edge of recessions, so forth, because there's no balance in life right now. So here's the top line risk. Trump is going to deconstruct a world which has served a small handful of people who have become accustomed to being very rich and very powerful. And they are still very rich and very powerful. So I think the first risk is they kill him. They tried to kill him twice, and somehow he's still here and doing his thing. So there's that. I think the same, and it's very hard to homogenize all of those interests, because there's the CCP and there's Russia, and there's Ukraine and Europe, us, Canada, Mexico. We have gone from what was a really bizarre vision of the future of a single globalist brave new world, which just turned into a corrupt gang of grifters stealing money and making themselves rich, to a big wake-up call where the only real safe havens are the nations in which you live, and your ability to restart or reconfigure basic human rights as much as you possibly can. Otherwise, everything fails and we go into a kind of like everything crashes. Nature has its own way of fixing stuff, right? When it gets bad enough, it dies. And then you have to start over again. History is very plain. Sometimes it happens with war, sometimes it's economic, sometimes there's famine or what have you. It's disease, all this other stuff. And any of those things, nature just forces you to go down. Unless, I don't know, you can avoid decadence. And we've had, I don't know, the last 4 years, I've never seen anything quite like it, insane decadence. Among a very few people where everybody else just sort of, they struggled. Some made it through okay. The 40%, I'm in the 40%, so I have some stocks, a little bit. But those are the risks. I'm hoping that, the Trump recession, if we have one, will be shallow and quick. Mm-hmm. It looks like it's going to be that way. These guys, they're all very smart. Elon Musk, he doesn't need power. He doesn't want power. Trump, actually, all he really is, I have never seen a vulgar expression of power from Trump. He's vain. He likes himself. He's kind of goofy, but he is dedicated to fair. If I had to pick one word for Trump, fair. That's where I would go. So shallow recession. Just it's almost like a dartboard game on what stocks to buy. If he's correct. And the way that you'll be able to see it unfolding, it's going to be pretty simple. I think there's going to be kind of like maybe a year or 6 months or something of Watergate 2.0, where the DOJ is going to actually issue some serious indictments based on investigations, some people who did some really bad things. And, you don't have to have a great imagination to follow that down. But the government now is in control of the DOJ. It's in control of all the resources necessary to have, except for the courts, and I think that they're going to sort those out as well. They have a kind of, come to Jesus, or accounting would be a better way of saying it, for people who have only taken a salary in government for maybe 30 or 40 years and they have $100 million. And they're going to find out, hey, how'd you get that? Because we can. And they're either going to claw it back or whatever. Maybe other people who've done other very bad things will probably have to account for it as well. But I don't think that, that the next few years are going to be vengeful. They're just going to have to be done. It's a kind of house cleaning to get to, balance again. You can't just say, oh, well, okay, all you guys can go free. You can't do that,
Mm-hmm.
Like the people who burned the Tesla dealerships. You can't do that. You can't burn things down to the ground. You can't steal $100 million and just say, oh, well, the stuff has to be made right. And I think that'll happen quickly. Then you move on, you re-embrace. I'm a 20th century guy. I grew up in the 60s and 70s when, things were crazy, but they were safe, pretty much. You're never safe, really, but nothing like the way life has been, let's just say, in the last 10 years, 15 years. And much worse, recently, since I never go anywhere without a weapon. I can't imagine I would ever be in America, but I will never leave the house without a weapon because I don't want to be without a weapon.
Mhm.
I don't want to live a life like that. So I think, and I make my daughters, I send them boxfuls of pepper spray. Just have it. You don't have to use it, but just be prepared because it's a real risk right now. So all that stuff goes away. That's what
it seems like the kind of the same mentality of owning some, let's say, physical gold. It's much better to have it and not need it than to need it and not have it, right?
Right. 100%. So here's a few words on gold. I don't think gold's really started yet. I really don't. Some things beneath the surface out there in finance, I know about them, and they seem to be managing them. But boy, if they get out of hand, I have no idea where the top of gold is. And I'm hoping that smart people in charge are going to be able to wind this stuff down without too much trouble. So you got to have some there. When gold really does get going, if you look at the history of it, it's a short cycle, low to high event, because the civilization can't take that kind of stress for too long. And so it'll, like in the 70s, it went, I don't know, from spring of 1979 to the winter of 1980, gold went up to $600. Silver went up $40. It's vertical and popped over, done, and that's the kind of breakage where, you get back to resetting everything and sort of starting over. You get guys like Volcker and everything like that. So I don't think we're there. I don't know whether the stock market's going to have a crash. It could, because there's so many risks out there. There's no way you can foresee what they are. And you just have to be careful. Always be careful.
Well, you mentioned a little bit earlier, the, let's say, gold to oil ratio, and you kind of alluded to it just now as well with, let's say, gold to silver. Do you think that when gold gets that, let's say, that rebalancing moment where it does get that pop, how do you think silver behaves in that scenario? Does it go with it?
Okay, so it's just a heavy opinion of my own, right? There's very, very little silver by any measure. Um, 75 or 80% of all new silver is incidentally produced as a byproduct of zinc and copper mining. And they call it throwaway because the market price for silver is too low to really go mining for silver. There's a handful of silver mines per se, maybe 10, that are standalone profitable silver mines because the price is so cheap. Historically, if you were to go back 3,000 years to Mesopotamia and the Egyptians and so forth, silver has always been more the monetary metal. China was same way. Gold. We became a money a couple of times in history. The Romans found a huge gold mine in Spain around 50 BC, and they mined millions of ounces for a while, and so they used gold, but then it got distributed around the world and wasn't practical. And then when they discovered gold in the New World in around 1500, the Spanish sent so much gold back to Europe in the next 150 years to cause inflation because there was more money. Right. But then that got distributed around the world. And they actually sent a lot more silver back. So there's a traditional ratio over, I guess, almost 1,000 years of about 15 ounces of silver to 1 ounce of gold, maybe 20. That held true well into the 20th century. And last week, it traded as high as 108 ounces of silver to 1 ounce of gold, which just gives you an idea of how high a premium gold has. So its relative value to silver is just almost, I don't know, 8 times at least, maybe 10 times occasionally. It's relationship over centuries. And oil has always been around 10 to 20 barrels to an ounce of gold. Now it's out to 55. So it's good to keep that in mind. An ounce of gold will buy a lot of stuff right now, So either the stuff has to go up or gold has to come down, right? So silver, you were asking about, how does that behave? There's just very, very little silver, and somewhere along the line, it's going to catch up. I can't tell you how it's going to do it or what it's going to do, but I think that it is too cheap. And there are other little things, like there's a record short position of SLV right now. It's very easy with ETFs to synthesize supply of silver and manipulate prices, which silver's been, notoriously manipulated over the years many, many times. So that's not a surprise. But if silver could go to 50 in 1980, and then go to 50 again in 2011, it could easily go to 50 anytime, and it would still be cheap relative to those prices if we adjusted for inflation over time. Mm-hmm. Right? So it's just very, very cheap. So on the one hand, silver is very, very cheap. And on the other hand, gold is very, very expensive. And it's very hard to tell when relative values get out of whack, which side, the discount or the premium side, is going to move. Mm-hmm. So you just have to, that's why I'm a passive long in silver. I'm just going to wait it out. I think I'll be right. Mm-hmm. And I think it'll be higher.
JJ, you mentioned as well this idea of financial, let's say, shenanigans as let's say as a placeholder in the gold market? Is that let's say the short positions that are held by bullion banks on both gold and silver, and how those end up playing into maybe a price squeeze for the metals?
Wow. Okay. Well, okay. I just put in a good word for the bullion banks. It's a physical commodity that they're working with.
Mhm.
The community is really a very straight shooting group of people that I know and I've worked with most of my life. I've never seen any cheating in gold, although it's easy for a lot of people who've lost money to say, I've been cheated. Banks are just big, heavily structured. Gold requires an immense amount of capital to facilitate to get it out of the ground. It's a global business. You've got tens of thousands, not hundreds of thousands of people working in countries all over the world with massive capex, getting this stuff, into a system where it's going to get refined and it's going to go through a financial system to the consumers that need it. And, it's just a very, very big enterprise with a very elite, small group of people that know how to do it. So there's not a lot of room, even in most markets, really, there's not a lot of room for cheating. Most people learn the rules, know the rules, and make money. Although the rules are bad rules, and there are many, many, many bad rules, most of the people stay in their lanes and do it right. So on the other side of that, the people who make the rules, they're the dangerous ones. Talking about, some of the exigencies we had earlier in the year. We'll start with Fort Knox, which is a pet peeve of mine. The United States has 250 million, 260 million ounces of gold, right? They're in 4 locations in West Point, Federal Reserve in New York, Denver, and in Fort Knox. Most of it's in Fort Knox. There hasn't been a hard audit of gold, our gold, in 70 years. There have been rumors that LBJ pilfered some of the gold to fund the war in Vietnam and his social programs. No one ever checked. I would. It was my gold. There was a hard push to audit the gold after Nixon shut the window in 71, and they legalized it in 75. And somehow that kind of went away. There were lawsuits against JP Morgan for manipulating prices in the late 90s, again in the early Y2K years, and still no one actually did what they should have done, just open the vault, hello, and walk in, So there's never been a hard audit. So what does that entail? Let's kind of blow your mind. So if you have 250 million ounces, 60 million ounces of gold, you've got over 600,000 400-ounce bars. And for one person to do a reasonable audit of that, I worked this out, would take more than 150 years, right? So if you break it down to a group...
I remember reading that article, and just the logistics of it will blow your mind.
Exactly. So tungsten has a specific gravity of 19, gold has a specific gravity of 20, or it might be invert. Maybe gold is 19, tungsten is 20. At any rate, they're so close in specific gravity that you could drill out a 400-ounce bar, fill it with 200 ounces of tungsten, paste it over with a thick layer of gold. It couldn't be read by an X-ray, a handheld X-ray, and walk off with half the gold, right? So knowing that kind of shenanigan, as you put it, it's possible. The idea that we have a reserve of gold is useless until its integrity has been thoroughly verified. It just becomes like this abstracted idea that's somewhere, right? Maybe it's real, maybe it's not. So
Just
I think, knowing, I'll go back to getting it done right. So if we got the 100 guys at a cost of about $60 a barrel, a bar, to audit every bar, we could distribute those guys in the 4 locations, and within 2 years, they could come back and say, half your gold is missing, 50 million ounces are missing, all of it is there. And once that's done, that would cost about 40 million bucks, I think, as you read. Once that's done, then we can sit back and say, okay, now we know where we are, right?
Mhm.
We're cool. We're good. Maybe we're not happy, or maybe we are happy, but at least we know what we're worth.
Mhm.
And I think the reason why it's not being done gives me a little bit of a creepy feeling that, they don't want to do it for a reason.
just
The
to just to fill in the specific gravity note here, I looked it up while we're speaking. Gold is 19.32 and tungsten is 19.25. So they're even closer. And
yeah, sorry.
and I was going to say as well, some of the gold that is held is actually pre-World War II gold. So it has, it's less pure, some of these bars. They're also not all the same delivery weight. So, all of that has to be kind of taken into consideration and, basically noted and assayed so that we know exactly how much actual gold minus the impurities in some of these bars as well.
Exactly. A single bar is worth like $1.3 million. Just one, smaller than a shoebox, just a little bar like this big, and yeah, it's worth doing. So I don't know how we got on that, but as far as shenanigans are concerned, that's top of my list for shenanigans.
That's very fair, JJ. I want to go back to something that you were kind of saying about having let's say a shallow recession. What role or what challenges, how does the balance, do you think, come out right now for Jay Powell? The idea of being able to fight inflation versus being able to lower rates to account for possibly recessionary job numbers. Those two things seem to kind of be coming at odds here. So how do you think that ends up balancing out, and what do you think the path forward is here for the Fed?
So they say that the Fed has a dual mandate. I think that's BS. Fed has a single mandate to protect the banking system and the dollar, period. Because if anything that affects those is going to affect the economy, which is going to affect employment. Raising and lowering rates will have a marginal impact on employment. It's silly to think. I mean, I think Powell probably has the hardest job of all the people. It's very hard, he has one tool. He says he has a toolbox, but I don't see a lot of wrenches and screwdrivers in there. I just see fit buttons. That's it. And he's doing the best he can. Trump is not adversarial. He's frustrated because he's working for, his job is the economy. That's his mandate. Take care of the people. That's what the president should be doing. That's what the Congress should be doing. They are the representatives of the people. And the people don't care about the banks. They do want their money to pay, you want your money to work. You want to be able to buy stuff with it. You want your savings to be whole after a period of time. You don't want to get ripped off. But so on the one hand, Powell is the banks and the dollar, and on the other hand, Trump is the economy and the people. And those two things are, although they're not exclusive, not mutually exclusive ever, are hard to align. They're always going to be button heads like this, you know. Powell's the no guy, and Trump is the, yeah, come on, let's do this. Let's get it going. You know, it's I think we've got the right people in the field. Um, I like Jay Powell understanding, you know, his job. I don't like the kind of narcissism of all the Fed speakers that, you know, they're always out there pontificating about this, that, and the other thing. They don't know any more than anybody else. You know, they have their meetings and everybody's like, yeah, you're really smart. The I think you know, we're going to really miss Jay Powell when he's gone. And you know, there are other really good guys, you know, that could take his place, but it's, you know, there's a downshifting. I remember when Volcker, you know, stepped down for Greenspan, and everybody thought, oh man, this is terrible. This is the end of the world. But little did they know, they got the right guy for the right time, you know. And Greenspan understood, you know, the markets. We were in a period in history, and you have to see things in that way. You know, when you get old like me, you stop thinking about, you know, today. You only think about time in a completely different way. You know, what's happening now. I'm going to digress for a second here. What's happening now is the history that people are going to be reading about 100 years, 200 years, 500 years from now. No one is ever going to forget Donald Trump. No one is ever going to forget what's happening now, or what happened with Joe Biden and who he was and who Barack Obama was, and all this string of events, you know, from the late 20th century into where we are now, with Musk going to Mars or trying to go to Mars, and I believe we will. I think we're going into outer space. All of these things, you know, if you can discipline yourself to have that kind of presence of mind when you sit down and you look at your computer and say, what am I going to trade today? It's the best exercise you can do. If you go inward and you just look at Meta and you think, oh well, I'm just going to buy Meta or I'm going to sell Meta. I think you get lost in the nano, and we're in a really, really, really big period of history where we've only been going here in America for 250 years. If we get this right, you know, we could get another 250 out of this. It could be really great, or we could, you know, screw it up. I hope we don't. So forgive me for digressing, but that's how I feel about it.
Yeah, well, that's why we have the time to have a good long form conversation like this, so that we can dive into the nuance of how and why you think these things, rather than just, you know, a 15-minute soundbite kind of thing.
Well, so if I could wrap this up, try to be right. Don't listen. You know, don't just say, hey, this indicator does this, the other thing. Have a view in which you have confidence, and work from that. Be a student of the markets in a way where you're not studying history, you're studying a living thing that's there in front of you, and try to see the big picture as much as you possibly can. You won't go far wrong if you do.
I was going to say, try to be right by considering that bigger picture instead of focusing on the micro, right?
Yeah. I think, you know, if, you know, you've got to have a view. If you don't have your own view, anecdotes. When I was much younger, I was very successful in gold, and I had a lot of accounts in Zurich. This is in the 70s, and one day I was in the Union Bank dealing rooms with an Italian guy, Cesare Corti, and he was, you know, running the shop at the time. And gold was going down big, and he was buying, you know, hundreds of thousands, maybe even millions of ounces, and losing a ton of money on it. He said, you have to have a view. at times like this. You can't be worried about every little dollar. And if you're bullish, on America and stocks go down, you should be buying. I don't know at what price. I know people are operating that way right now. I think they're wrong. I think that stocks can go lower, but you have to have a view.
Excellent. Well, JJ, I really appreciate you walking us through your thoughts, through some of your history, giving us your vibe on the markets, and also, illuminating a couple of the very useful tools that you use. Of course, you write extensively on your Substack, jj745.substack.com. You have some short stories on there. You also write twice a day about the markets, what you're seeing, what you're considering, what you're looking at. And of course, on Twitter as well, excellent follow at Alyosha745, ALYOSHA. JJ, thank you so much for your time today. I really appreciate it.
My pleasure. Thank you for having me. I appreciate it.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.